All right, so today we're going to dive into a topic that I find pretty fascinating. Bitcoin is a corporate treasury asset. You sent over this article from Cointelegraph, which is really a great resource for anything crypto related.
Mm.
So we're going to kind of go beyond the hype and see if companies holding Bitcoin, you know, is this like revolutionary or is this reckless? What do you think? Is Bitcoin actually a good fit for a company's finances? Or is it just way too risky?
Well, it's definitely a bold move, and to understand why we need to step back and think about what a corporate treasury actually does, it's not just about paying the bill.
Right, it's a lot more than just balancing a checkbook.
Exactly.
Okay.
So a treasury needs to make sure that there's enough cash on hand, for day-to-day operations, and that's liquidity management. They're also thinking about risk like interest rate changes
hmm
or currency fluctuations and finding ways to mitigate that.
So they're kind of like financial guardians protecting the company's assets.
Yeah, that's a great way to put it. And while they're protecting assets, they're also trying to grow them through short-term investments, managing debt to keep it healthy, and overall strategically planning how to use the company's finances to reach their goals. It's this constant balancing act between minimizing risk and maximizing returns.
Which brings us back to Bitcoin. It seems like a pretty extreme approach to that balance, especially when you look at MicroStrategy. They basically went all in on this idea.
They really did. MicroStrategy is such a fascinating case study because they were essentially a dot-com crash casualty that reinvented themselves as this Bitcoin pioneer. Their CEO, Michael Saylor, is a huge believer in Bitcoin as a hedge against inflation. So much so that they now hold a staggering 226,500 Bitcoins, which makes them the largest corporate holder globally.
It's almost hard to wrap your head around that number, a company holding that much Bitcoin. I mean, how do you even buy Bitcoin on that scale? It's not like walking into a bank and asking for $1 billion worth, right?
Definitely not. They had to use a variety of strategies,
Hmm.
issuing new shares of the company to raise capital, using bonds for debt financing, reinvesting profits, and even taking out loans that were backed by their Bitcoin holdings.
Wow, that takes some serious financial maneuvering. It's interesting because some of the tactics they used are tactics that a lot of individual investors use, like dollar cost averaging. The article mentions that they consistently bought Bitcoin regardless of the price fluctuations.
Yeah, and that's a crucial point. While dollar cost averaging can be a good strategy to mitigate risk over the long term, with an asset as volatile as Bitcoin, it could also mean they brought a significant amount at inflated prices.
So their impressive stock price surge, over 1,000 times its low back in 2002, could be a result of this strategy. But it also highlights the potential downsides. They were riding the wave, but what happens if that wave crashes?
Exactly. Their success is undeniable. But it's important to analyze whether this is a sustainable strategy or just a lucky streak. What are the long-term implications for them? And for any company considering this approach?
Right, because there's more to this than just price fluctuations. What other benefits could a company see from holding Bitcoin?
Well, aside from the potential for price appreciation, Bitcoin is often touted as a hedge against inflation, similar to gold. This resonates with investors who are concerned about the decreasing purchasing power of fiat currencies. Also, there's the appeal to forward-thinking investors who are excited about the potential of cryptocurrencies.
So it could attract a whole new set of investors who are looking for exposure to this emerging asset class.
Absolutely. And then there's the aspect of liquidity and financial flexibility. We saw with the collapse of Silicon Valley Bank how traditional banking systems can be vulnerable. Bitcoin, with its decentralized nature, could offer companies an alternative way to access funds, especially in times of crisis.
That's an interesting point. It's like having a backup financial system in place.
Plus, there's the brand recognition that comes with being an early adopter. MicroStrategy is often mentioned alongside companies like Tesla and NVIDIA, positioning themselves as leaders in financial innovation.
That kind of exposure is invaluable. But we can't just focus on the potential rewards. What are the risks companies need to consider before jumping on the Bitcoin bandwagon?
The biggest one is the volatility risk. We all know how wildly the price of Bitcoin can swing. Those fluctuations could significantly impact a company's balance sheet and stock price, potentially sending them into a downward spiral.
That's a scary thought. You'd be at the mercy of market forces that are, to put it mildly, unpredictable.
Exactly. And then there's the liquidity risk we touched on earlier. If a company needs to quickly sell a large amount of Bitcoin during a market downturn, it could exacerbate their losses and even destabilize the entire market.
It's like a ripple effect, where one company's actions could have far-reaching consequences.
And lastly, there's the regulatory risk. Governments around the world are still figuring out how to regulate cryptocurrencies. So there's always a chance new laws or taxes could be implemented that could hurt Bitcoin's value. It's a bit of a moving target for companies to navigate.
So even if a company is comfortable with the volatility, they have to consider the possibility of the rules changing overnight. It seems like MicroStrategy is managing these risks effectively. But is their approach sustainable in the long run? How are they staying afloat in this wild west of Bitcoin?
Well, they've certainly proven their ability to weather the storms, having navigated multiple Bitcoin bear markets. They've also strategically structured their debt, with long-term maturity dates, giving them time to ride out short-term volatility.
So they're not just reacting to the market, they're thinking long-term and planning accordingly.
Right. Their bond issuances and repayments also demonstrate their careful planning and strategic approach to managing risk. They're not just throwing money at Bitcoin, they're making calculated moves.
It sounds like they're walking a tightrope,
Yeah.
but so far they haven't fallen off. But does their success mean other companies should follow suit?
That's the question, isn't it? MicroStrategy's story is compelling, but it's a single case study. We need to think critically about the potential dangers of overexposure to such a volatile asset. Diversification is still a fundamental principle of sound financial management.
Putting all your eggs in one Bitcoin basket is probably not the wisest strategy.
Probably not. It really comes down to a company's risk tolerance and their long-term vision. If you were in charge of a company's finances, would you consider adding Bitcoin to the Treasury?
That's a tough question. There's so much to consider, and the stakes are incredibly high. It's clear that MicroStrategy has made a bold bet and it's paying off for now. But is this the start of a trend or an outlier? What do you think?
It really makes you wonder, what if this is the start of a trend? Imagine a world where Bitcoin becomes like a common thing you see in corporate treasuries. How would that change things?
That's where things get really interesting. If Bitcoin were to become like a mainstream treasury asset, it could potentially disrupt the entire financial system as we know it.
That sounds pretty dramatic. What kind of disruption are we talking about? Well, for starters, we could see a decreased reliance on traditional financial institutions. Since Bitcoin operates on a decentralized network, companies wouldn't need banks to act as intermediaries.
So companies could have more direct control over their finances, cutting out the middleman.
Exactly. And that increased autonomy could have a ripple effect throughout the economy, potentially leveling the playing field for businesses in developing countries, where access to traditional banking is limited.
It could be a game changer for those who've been excluded from the traditional financial system.
That's right. Bitcoin has the potential to democratize access to financial services and fuel economic growth in regions that have historically been underserved. But like with any major shift, there's the potential for negative consequences as well.
What kind of downsides should we be considering?
One major concern is the potential for increased volatility and risk in the global financial system. If a large number of companies start holding Bitcoin, it could amplify the price swings we already see in the crypto market, potentially leading to financial instability for companies and even entire economies.
So instead of making the system more stable, it could actually make it more unpredictable and chaotic. That's a sobering thought.
It's definitely something to consider. And then there's the question of how governments would respond to this shift. Right now, we're seeing a patchwork of different regulations around the world. Some countries are embracing cryptocurrencies, while others are taking a more cautious or even hostile approach.
It's still a very uncertain regulatory landscape for companies to navigate.
Absolutely. This regulatory uncertainty creates a lot of challenges for companies. Considering adding Bitcoin to their balance sheets, they need to be prepared for the possibility of sudden changes in regulations that could impact their holdings. One wrong move could have major consequences.
It's a lot for companies to weigh. The potential rewards are huge, but so are the risks.
That's the crux of it. We're still in the early stages of understanding Bitcoin's potential impact, and the future is far from certain.
It's definitely a story that's still being written. Speaking of which, this Cointelegraph article focuses on MicroStrategy. But I'm curious, have other companies adopted a similar approach?
Well, MicroStrategy is the most prominent example. They're not alone. There are a few other companies, particularly in the tech sector, that have started adding Bitcoin to their treasuries, though not on the same scale as MicroStrategy.
So it's not a mass movement yet, but it's definitely something that other companies are watching closely.
Yes, and their decisions will likely depend on a number of factors, including their risk appetite, their investment philosophy, and how the regulatory landscape evolves.
It's a complex decision with far-reaching implications. It's fascinating to see how this is all playing out. What are some of the key factors that companies should consider when deciding whether or not to add Bitcoin to their treasury?
Well, first and foremost, they need to thoroughly assess their risk tolerance. Bitcoin is a highly volatile asset, and companies need to be comfortable with the potential for significant price swings both up and down.
So it's not for the faint of heart.
Definitely not.
Yeah.
They also need to carefully evaluate their investment strategy and determine if Bitcoin aligns with their long-term goals. It's not just about jumping on the bandwagon. It needs to be a strategic decision.
They need to have a clear understanding of why they're doing it, not just because it seems trendy.
Exactly. And of course, they need to stay informed about the evolving regulatory landscape. The rules surrounding cryptocurrencies are constantly changing, and companies need to be aware of the potential legal and financial implications.
It's like trying to hit a moving target. What about the practical aspects? How do companies actually go about acquiring and managing Bitcoin?
That's an important question. There are specialized platforms and custodians that cater to institutional investors, offering secure storage and trading solutions for large amounts of Bitcoin.
So it's not as simple as setting up a personal crypto wallet. It's a whole different ballgame.
Right. Companies need to work with experienced professionals who understand the nuances of the crypto market and can help them navigate the complexities of buying, storing, and managing large Bitcoin holdings.
It sounds like it requires a whole new set of skills and expertise. What about the accounting and tax implications? Are there specific regulations for companies holding Bitcoin on their balance sheets?
Yes, the accounting and tax treatment of Bitcoin can be quite complex and varies depending on the jurisdiction. Companies need to consult with tax professionals to ensure they are complying with all applicable regulations.
It's another layer of complexity for companies to consider.
It is, but despite these challenges, there's a growing sense that Bitcoin is becoming a more legitimate asset class, and its potential role in corporate finance is being taken more seriously.
It's definitely a topic that's generating a lot of discussion and debate. What are some of the key arguments for and against Bitcoin as a corporate treasury asset?
While on the positive side, proponents of Bitcoin argue that it offers a hedge against inflation, especially in an environment where central banks are printing money at unprecedented rates.
So it's seen as a safe haven asset similar to gold.
Right. They also point to its potential to increase liquidity and financial flexibility, particularly in times of crisis.
Like we saw with Silicon Valley Bank.
Exactly. And they believe that Bitcoin can attract forward-thinking investors who are looking for exposure to this emerging asset class.
What about the arguments against it?
Critics argue that Bitcoin is too volatile and unpredictable to be considered a safe and reliable treasury asset. They point to its history of dramatic price swings as evidence that it's more of a speculative investment than a store of value.
So the volatility is a major concern for them.
Absolutely. They also worry about the regulatory uncertainty surrounding Bitcoin and the potential for governments to crack down on cryptocurrencies, which could negatively impact its value.
It's a valid concern. Governments are still trying to figure out how to regulate this space.
That's right. And finally, they argue that there are more established and less risky ways for companies to manage their finances and achieve their investment goals.
So they believe that traditional financial instruments are a safer bet.
In many cases, yes. It ultimately comes down to each company's individual circumstances and risk tolerance.
It's a lot to weigh. What are some alternative strategies that companies might consider instead of, or in addition to holding Bitcoin?
Well, there are many other asset classes that companies can invest in, such as stocks, bonds, real estate, and commodities.
These are more traditional investment options.
Exactly. And they offer varying levels of risk and return. Companies can also diversify their holdings within these asset classes to further manage their risk.
So instead of putting all their eggs in one basket, they can spread their investments across different assets.
Right. And they can also consider investing in funds that specialize in certain sectors or industries. This allows them to gain exposure to a basket of assets without having to pick individual stocks or bonds.
It's a way to diversify their portfolio without having to do all the research themselves.
Exactly. And of course, companies can also choose to hold cash or cash equivalents, which offer the lowest level of risk, although they may not provide the same potential for returns as other investments.
So it's all about finding the right balance of risk and reward that aligns with their financial goals and risk tolerance.
Precisely. And it's important to remember that there's no one-size-fits-all approach. What works for one company may not work for another.
It's about finding the right strategy for their specific circumstances.
Absolutely. Now, shifting gears a bit, let's delve into the future of Bitcoin and its potential role in the global financial system. What are some of the trends and developments we're seeing that can shape the future of this asset class?
It's fascinating to think about where this is all headed. What are some of the key trends you're observing?
One major trend is the growing institutional adoption of Bitcoin. We're seeing more and more large financial institutions, including hedge funds, asset managers, and even banks, investing in Bitcoin.
So it's becoming more mainstream.
That's right. This increased institutional interest is helping to legitimize Bitcoin as an asset class and is contributing to its price appreciation.
It's adding legitimacy and fuel to the fire.
Exactly. Another trend is the development of new financial products and services built around Bitcoin.
What kind of products and services are we talking about?
Well, we're seeing the emergence of Bitcoin ETFs, which make it easier for investors to gain exposure to Bitcoin without having to directly own the underlying asset.
So it's like buying shares of a company that holds Bitcoin.
That's right. We're also seeing the development of Bitcoin-based lending and borrowing platforms, as well as new payment systems that utilize Bitcoin.
It sounds like a whole new financial ecosystem is being built around Bitcoin.
It is. And this is creating more opportunities for individuals and businesses to interact with Bitcoin and to use it in their daily lives.
It's moving beyond just being an investment asset and becoming more integrated into the financial system.
Precisely. And this is likely to continue as more people and businesses become familiar with Bitcoin and as the technology matures.
What about the regulatory landscape? How is that evolving? And what impact could it have on the future of Bitcoin?
Regulation is a key area to watch. As Bitcoin becomes more mainstream, governments around the world are grappling with how to regulate it.
It's a new challenge for them.
It is. Some countries are taking a more proactive approach, creating clear frameworks for Bitcoin and other cryptocurrencies.
They're trying to provide clarity and certainty for businesses and investors.
Exactly. While others are still taking a wait-and-see approach or are even hostile towards Bitcoin.
So the regulatory landscape is still very much in flux.
It is. And this uncertainty can be a barrier to wider adoption of Bitcoin.
It makes it difficult for companies to plan and make informed decisions.
That's right. However, I think we'll see more clarity on the regulatory front in the coming years, which will likely lead to increased institutional adoption and further mainstreaming of Bitcoin.
So regulation could be a key driver of growth for Bitcoin.
It could be.
This is all incredibly fascinating. It seems like we're on the cusp of a major shift in the financial system.
It does feel that way. The next few years will be crucial for Bitcoin.
What are some of the key things you'll be watching for to gauge the future of Bitcoin?
I'll be paying close attention to the level of institutional adoption, the development of new financial products and services, and the evolution of the regulatory landscape.
Those are all key indicators of where things are headed.
Absolutely. I'll also be watching for any major technological advancements or breakthroughs that could impact Bitcoin's scalability, security, and functionality.
So not just the external factors, but also the internal evolution of the technology itself.
Exactly. The pace of innovation in the crypto space is rapid, and new developments are constantly emerging. It's an exciting time to be following this space.
It certainly is. It feels like we're just scratching the surface of what's possible.
We are, and that's what makes it so compelling.
This deep dive has been incredibly insightful. We've covered a lot of ground from the basics of Bitcoin to its potential impact on the global financial system.
It's been a pleasure exploring these ideas with you.
It's been great. So to bring it back to our listener, what are the key takeaways they should keep in mind as they consider the role of Bitcoin in corporate treasuries and the future of finance?
Well, first and foremost, it's important to remember that Bitcoin is a disruptive technology with the potential to fundamentally change the way we think about money and finance.
It's not just another investment, it's a paradigm shift.
It is. And while it offers potential benefits, such as a hedge against inflation and increased financial flexibility, it also comes with significant risks, including volatility and regulatory uncertainty.
So it's a high-risk, high-reward proposition.
Exactly. Companies need to carefully assess their risk tolerance and investment goals before deciding whether or not to add Bitcoin to their treasuries.
It's not a decision to be taken lightly.
Definitely not. And it's crucial to stay informed about the evolving landscape of Bitcoin, including the regulatory environment, technological advancements, and the broader adoption trends.
Knowledge is power in this space.
It is. And ultimately, the future of Bitcoin and its role in the financial system will depend on a complex interplay of factors, including technological innovation, government regulation, and market adoption.
It's a story that's still being written, and we're all watching to see how it unfolds.
We are. And it's going to be fascinating to see what the next chapter holds.
It really feels like we're at a crossroads, not just for Bitcoin, but for the whole financial system.
Yeah, I agree. We're seeing like the emergence of a parallel financial system one that operates outside the traditional structures of banks and governments.
It's exciting and also a little bit daunting to think about like all the implications of that. What do you see as the biggest opportunities and challenges presented by this new system?
Well, on the opportunity side, it has the potential to create a more inclusive and accessible financial system, one that empowers individuals and businesses that have been traditionally underserved by traditional institutions.
So it could be a force for greater financial inclusion and economic empowerment.
Exactly. It also offers the potential for increased efficiency and transparency in financial transactions.
Because everything is recorded on the blockchain, right? There's like a permanent and auditable record.
That's right. And this could lead to reduced costs and faster transaction times, which could benefit businesses and consumers alike.
It's like cutting out the middleman and streamlining the whole process.
It is. However, there are also significant challenges. One of the biggest is the issue of volatility. As we've discussed, the price of Bitcoin can fluctuate wildly, and this can create uncertainty and risk for businesses and investors.
That volatility is a double-edged sword. It can lead to big gains, but also big losses.
Absolutely. Another challenge is the lack of regulatory clarity in many jurisdictions. This can make it difficult for businesses to operate in the crypto space and can hinder wider adoption.
It's like trying to navigate a ship in uncharted waters.
It is. And then there's the issue of security. While the blockchain technology that underpins Bitcoin is very secure, there have been instances of hacks and thefts from cryptocurrency exchanges and wallets.
So it's important for individuals and businesses to take steps to protect their Bitcoin holdings.
Absolutely. They need to choose reputable custodians and exchanges and implement strong security measures.
It's like anything else valuable, you need to take steps to protect it.
Right. And finally, there's the challenge of scalability. The Bitcoin network can only process a limited number of transactions per second. This can lead to congestion and delays during periods of high activity.
So it's not a perfect system yet. There are still technical hurdles to overcome.
That's true. However, there are ongoing efforts to improve the scalability of Bitcoin and other cryptocurrencies. And I think we'll see significant progress in this area in the coming years.
It's an evolving technology, and it's constantly improving.
It is. Now, zooming out a bit,
Mm-hmm.
I'm curious to get your thoughts on the broader implications of Bitcoin and the rise of cryptocurrencies. How do you think that's going to change the world?
That's a big question, but it's one worth asking. I think we're witnessing a fundamental shift in the way we think about money and value. For centuries, we've relied on centralized institutions, like governments and banks, to control and manage our financial systems. But Bitcoin and other cryptocurrencies offer an alternative, a decentralized system that empowers individuals and gives them more control over their finances.
That's a powerful idea. It's a democratization of finance.
Exactly. And I think this has the potential to transform not just the financial industry, but many other aspects of our lives, from the way we do business to the way we interact with each other.
It could change the very fabric of society.
It could. It's hard to predict exactly how it will all unfold. But I think it's safe to say that we're entering a new era, one where the traditional power structures are being challenged, and where individuals have more agency and autonomy than ever before.
It's an exciting time to be alive, to be witnessing this transformation firsthand.
It is, and it's important for all of us to be engaged in this conversation, to learn about these new technologies, to understand the potential benefits and risks, and to shape the future of finance in a way that benefits everyone.
I couldn't agree more. It's a collective effort.
It is. Now, before we wrap up this deep dive, what are some key questions our listeners should be asking themselves as they process all this information?
Well, I think the first question is, what is your personal view on the role of money in society? Do you believe the current system is working well, or do you see the need for an alternative?
It's about examining your own beliefs and assumptions about money and finance.
Exactly. Once you've reflected on that, I think the next question is, what level of risk are you comfortable with? Bitcoin and other cryptocurrencies are volatile assets. So it's important to be honest with yourself about how much risk you're willing to take on.
It's not for everyone. It requires a certain level of risk tolerance.
Right. And finally, I think the most important question is, how do you want to participate in this emerging financial system? Do you want to be an observer, an investor, an entrepreneur, something else entirely?
It's about finding your own place in this new world.
It is. And there's no right or wrong answer. It's a personal journey.
Well, this deep dive has been a whirlwind of information and insights, and I hope our listener feels equipped to continue exploring this fascinating and rapidly evolving space.
It's been a pleasure diving deep with you.
Likewise. And to our listener, remember, the future of finance is being written right now, and you have the power to be a part of it.
Keep learning, Stay curious and don't be afraid to challenge the status quo.
Until next time, keep diving